This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Global oil prices fell on Wednesday and China denounced the U.S. as a bully after President Donald Trump's administration said it had persuaded Venezuela to divert supplies from Beijing and import up to $2 billion worth of sanctioned crude. The deal was in line with Trump's stated aim of controlling the South American OPEC members' vast oil reserves after deposing its leader Nicolas Maduro, whom it had long cast as a drug trafficking dictator in league with Washington's foes. Maduro's Socialist Party allies remain in power in Venezuela, where interim President Delcy Rodriguez is treading a fine line between denouncing his kidnapping and kick-starting cooperation with the U.S. under explicit threats from Trump.
Oil prices fell on Wednesday after President Donald Trump said the United States had reached a deal to import up to $2 billion worth of Venezuelan crude, a move that is expected to increase supplies to the world's largest oil consumer. Brent crude futures fell 11 cents to $60.59 a barrel by 11:04 GMT, while U.S. West Texas Intermediate crude fell 27 cents to $56.86 a barrel. Both benchmarks extended declines of more than $1 from the previous trading session, as market participants expected ample global supply this year.
Moving on to the top news in the energy sector.
Chinese independent refiners are expected to switch to heavy crude from sources including Iran in coming months to replace Venezuelan shipments halted since the U.S. removed the country's president, traders and analysts said. Caracas and Washington agreed to export up to $2 billion worth of Venezuelan crude to the United States, President Donald Trump said on Tuesday, after U.S. forces captured Venezuelan President Nicolas Maduro over the weekend. That arrangement is likely to curtail Venezuelan supply to China, analysts say, reducing a source of cheap oil for independent refiners known as teapots. The world's biggest crude importer is a major buyer of discounted sanctioned oil from Russia, Iran and Venezuela.
The United States is attempting to seize a Venezuela-linked oil tanker after a more than 2-week-long pursuit across the Atlantic, two U.S. officials told Reuters on Wednesday. The seizure, which could stoke tensions with Russia, came after the tanker, originally known as the Bella 1, slipped through a U.S. maritime blockade of sanctioned tankers and rebuffed U.S. Coast Guard efforts to board it. The officials, who were speaking on condition of anonymity, said the operation is being carried out by the Coast Guard and U.S. military. Next, we have the top news in metal markets. Japan called China's ban on dual-use exports for its military absolutely unacceptable on Wednesday, amid a looming threat of broader curbs on vital rare earths in an escalating dispute between Asia's top two economies. Dual-use items are goods, software or technologies that have both civilian and military applications, including certain critical minerals essential for making drones and chips. Japanese Prime Minister Sanae Takaichi touched off the dispute late last year by saying a Chinese attack on democratically governed Taiwan could be deemed an existential threat to Japan. China regards Taiwan as part of its territory, a claim the island rejects.
Iron ore futures rallied on Wednesday to their highest in multiple months, boosted by hopes of improving demand in top consumer China following Beijing's pledge of easing monetary policy this year. The most traded May iron ore contract on China's Dalian Commodity Exchange closed daytime trade 4.09% higher at 828 yuan, $118.46, a metric ton, its highest since July 23. The benchmark February iron ore on the Singapore Exchange was 2.47% higher at $109.10 a ton as of 0822 GMT, touching its highest since February 21.
We will now look at the top news in the agricultural sector.
China's state stockpiler Sinograin bought 10 U.S. soybean cargoes this week, three traders told Reuters on Tuesday, as the world's top buyer continues purchasing from the United States following a late October trade truce. The cargoes, totaling around 600,000 metric tons, are for shipment between March and May, the traders said, which is the peak shipping season for rival supplier Brazil. China's total purchases from the latest U.S. crop were now estimated at 8.5 million to nearly 10 million tons, according to traders and analysts, representing up to 80% of the 12 million metric tons that U.S. Treasury Secretary Scott Bessent said China pledged to buy by the end of February.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.